Right. Well, good morning, everyone, to Market Insights. This is our monthly update on what the market is doing with our host, Scott Kiburz. He is now the Vice ARMLS Chair. So, Scott, I know we've got a lot to go over today. I am ready when you are.
Let's go to work, young lady. Let's go to work. So the first slide, again, just looking at Greater Phoenix graded together. This comes from the Greater Phoenix Economic Council. And I love the view of the skyline of Metro Phoenix. We are in growth mode. Please, Miss Sarah. Ladies and gentlemen, one of the questions in the chat box is, do you want to see showing time showings? Is that still important to your sellers? If I'm a listing agent, do I need to see that people are still coming to homes? Well, there's a great way to see the showing time results, and it's in ARMLS. So I've got two quick slides. Slide one is, this is the main slide of ARMLS when you log on. And I put the green arrow at the top, support center by appointments only, COVID-19. If you click on that support center by appointment only, the next slide, Sarah, this is what will come up. ARMLS COVID stat page. Believe it or not, ladies and gentlemen, I put 4 green bullets on there because all of those have great insight as to what's happening at the local stage, the national stage, virtual open houses, and the very last one, showing time data. If you click that one, Sarah, next slide, this is what you're going to see updated every single day. So this was updated on December 1st, and this is the showings that are happening compared to 2019 and 2020. We're actually ahead of where we were this time a year ago. And you got to know, ladies and gentlemen, our inventory is down dramatically, 30–40% down from a year ago. And yet we're still having the same number of showings. The activity, the robustness is the interpretation of that. Our market is still on fire and people do want a home. Next slide, Sarah. This is Cronf report. This is October. And what I wanted to illustrate for you here, ladies and gentlemen, it's a little bit of a dated slide, but the December slide isn't out yet. But what you're going to see here is that we normally look at our inventory like a hockey stick. Things below 600,000, very little inventory. We have to get north of 2 million to even get a 6 months inventory supply, and over 3 million, in this case, to have an 11-month supply of inventory at 3 million. So with that said, this slide here is the hockey stick. This is our market of the moment. Sarah, next slide, please. Ladies and gentlemen, this is December 1st and 2nd. I didn't pull it for this morning, but on December 1st, the morning thereof, we had 6,021 active listings and 10,803 under contract. Yesterday morning, we had 5,915. We did dip below 5,900 or 6,000 active listings. Ladies and gentlemen, I'm not sure where the census is going to officially hit for us, but we're pushing between 4.8 and 5 million people in Metro Phoenix, and to have 6,000 listings for that number, that is very small. Am I still on okay, Sarah?
Yeah, you're doing great.
Fantastic. So the next slide here is price per square foot. And just notice the average is in blue and the median is in red. And this is going back to 2018. And just see the steady, consistent climb that we've had since June of this year. Once we got through COVID, we've just had a steady pace upward in our home pricings for the last, well, 6 months for sure. Sarah? This slide is very important, ladies and gentlemen. This is the absorption rate at the first of the month, December 1st, for Arizona Regional MLS. Our absorption rate was 124%. We have 0.81 months of inventory total in our MLS. So in practicality standpoint, what does that mean? Well, that means that we're selling, if we didn't take another listing in our MLS today through the end of December, we'd be out of inventory before Christmas, right at Christmas. We're having to reach ahead and pull 24% of the future month's inventory to get our satisfied clients, get them closed right now. And the next thing you need to know perspective-wise, this is closed inventory at 124. We're probably pushing 150, 165% of all of our listings are going under contract, and 124% of them on a monthly basis are closing. We're in a fierce white hot market. Sarah? Ladies and gentlemen, this is again a Cronf report. This is off the Extreme Reports, and I pulled this again this month for 5 reasons. we hit 5 all-time highs in the month of November. We hit an all-time high for the active list price, the monthly sales price, the dollar volume sales. We sold 4.69 billion worth of inventory. The low was in January of 01 when we only sold 520 million. That is 7-8 times what we sold in 01. Our average sale price in this report annualized is coming in at 388, and the Cromford indexes were just like a demand factor. We're at 374%, which was an all-time high November 30th. Sarah? This too is a Cromford report, and this particular report here is just a static average. I wanted to compare what it looks like from this vendor versus ARMLS. And what they're saying in this report here is our monthly average sale price is 208. Our annual sale price is 190.96 per square foot from a year ago. We're currently at an annual appreciation change in this month from a year ago. We're up 16%. And our annual appreciation over the course of the year is we're up 11.5% according to Cromford in this specific report, November 30th of 20. Next slide, please. Ladies and gentlemen, we still have a moratorium and a forbearance going on with people in rentals and home ownership. And at some point this may change. But in the Cromford report here, I've highlighted in purple at the top, the descending line, is the year 2013, where we had over 11,000 at the beginning of the year, and by the end of the year, we were sub 6,000 pending foreclosures in 2013. As we started the year in green in 2019, we were just over 2,000, and we ended just under 2,000 all through the year. 2020, we started at just under 2,000, and we're dipping below 1,000 pending foreclosures. Not many, not many. And part of that, if you go back and look at March, April, May, is when we went into some type of forbearance. So that number is still low. And if and when we do move away and hold landlords and people accountable for their mortgage, we may see that number pick up. We're going to continue to trend that for everybody in the audience. But just know we're tracking that. And right now, pending foreclosures, all-time high, just under 1,000 per month. Sarah? We're going to go take a deep dive here, ladies and gentlemen. We're going to dive into Maricopa County. We're going to dive into Metro Phoenix, and then we're going to take a quick pivot. So stay with me here, ladies and gentlemen. This is all of Maricopa County, not Pinal County, just Maricopa County. Our active listings in blue are down 45.4% from where they were this time a year ago. And in this, when this report was run, we had 5,994 active listings. Our sold listings were up 23%, up 7430 from where it was November a year ago was 6,043. Key indicator in yellow, ladies and gentlemen, median sale price 16% up for all Maricopa County averaged. It's gone from 169 a year ago to 196.53 today. Significant. Months supply down, giving perspective, and this is causing fear in our marketplace for our sellers. Month of supply is down 55%. Sellers who do want to sell have fear, like, where am I going to go? I'm selling at the peak of the market for my house. Do I want to upgrade or downsize? That causes fear. So people in the audience, the single best thing we can do is educate ourselves to navigate not only the buy and sell of home one into the second step of the second home. And ladies and gentlemen, that is where your corporate partners like Landmark and your lender partners and your inspectors and everybody is working in concert. That's when those relationships are so important. And Landmark does such a great job with that. As a broker, I had 2 files this year that were a 4 domino. Went from house 1, 2, 3, and 4, and all parties involved, all buyer and seller agents involved. We happened to be 1 and 2 in one, and we were 1, 2, 3 in the second. And Landmark carried that football and made that transaction seamless for us, took all the stress out. So I can't compliment them enough. They have earned the right to our business. Days on market down 22%. Wow, we're just 28 days of inventory. If we just stop putting listings in tomorrow, we'd be out of inventory by Christmas. So, Sarah, moving forward, So this is what's happening in Metro Phoenix, supply versus demand. So the bottom set of numbers is November of 2019 versus the top set is November of 2020. Ladies and gentlemen, we had 10,000, almost 11,000 active listings a year ago, and we have just under 6,000 today. That is putting stress in our marketplace. As a listing agent, as a buyer agent, your skills to bulletproof the transaction have never been more important. I wanted to give perspective on that we are down just about 6,000, 5,000 plus listings from where we were a year ago. Sarah? Now, in that same piece, this is what it looks like in terms of percent of homes. There has been a change in our marketplace. On the right-hand side is the year 2019. The year 2019, we had just 2.7 modular manufactured homes, and 15.55% of our inventory was townhomes and condos, while the dominant share, 81% plus, single family. Single family is becoming very, very expensive for a lot of buyers. So the expanse of townhomes and condos has grown by over 8%, while the single family has come down a total of 10. And ladies and gentlemen, manufactured mobile homes has more, well, just shy of doubling where it was this time a year ago. That's become an alternative buy product, a product that a buyer can purchase, and it is on the rise significantly. Don't count that out. Next slide. Sold listings, same thing. A year ago, we had 86% were a normal sale. Today, a normal sale is 83%. We had a year ago, we had flips at 5.8%, and this year our flips are 5.6%. This is all of Maricopa County. Ladies and gentlemen, I want you to know that not all things are equal. New homes a year ago, 4.9% in all of Maricopa County. They didn't even make up a total of 3% in this year total. If you see an unknown or other, we're in the black circle. If we don't have 3% of the transactions in one category, it goes to an other and or an unknown. So a year ago in green, we had new builds at 4.7%. What that's saying is we have dipped down a total of less than 3% of our home products that are a new build. Now, we're going to get to Phoenix here in a minute, so pay attention to that data point. Next slide, Sarah. Here we go, just a quick push for all rentals in Maricopa County. Active listings are down 25%. We have 13 days in purple. We have 13 days on market, and the rent rate is up 13.6 in yellow from where it was a year ago. This is all Maricopa County combined. These are good things to know as a trend. Next slide, we're going to have a break, and now we're going to go to Metro Phoenix, please. So here, what I wanted to compare for you, ladies and gentlemen, this being the biggest city in our metro, our active listings here down 41%. Solds are up 17 versus 20 something. Our median sale price is up 17.8% from where it was a year ago. 28 days on market, and supply is 0.83 months. It's down 50% from where it was a year ago. Now we're going to take a little bit deeper dive into a couple other things here. Sarah, next slide. In Phoenix a year ago, in the year 2019, we had 2,700. Today we have 1,500 homes in Metro Phoenix for between 1.6 and almost 2 million people. Active listings, that is townhomes, condos, manufactured homes, single family, 1,590 for 1.6. That's not much. That's not much. Next slide. Here's what I wanted to point out here, ladies and gentlemen. We have really changed our market in terms of, if we go to the right-hand pie grid, 78% of our homes a year ago were single family. Today it's down to 68%. Over 10% of our homes, let's see, how do I say this better? Single family homes are down 10% from where they were a year ago, active listings. And that's been made up predominantly by townhomes and condos, and then manufactured homes in this case is climbed 100% more than where it was a year ago. It's gone from 1 to 2%, but it's up 100% from where it was a year ago. Now, what does this mean in terms of activity? Next slide. In terms of activity, solds, our solds are still, the lion's share are single family. Those are selling faster than anything else. What I wanted to point out in this slide here is go to, on the right-hand grid in yellow, in Phoenix, flips were at 7%. And the same thing holds true in the 7.5% today in the left-hand grid. My point to you here, ladies and gentlemen, is flips are 2% higher in Phoenix than they are in all of Maricopa County combined. That's all I want you to know and walk away with. And then the other thing here is, while new builds were 3.5% in this graph, again, they didn't even show up as a total of 3% for the next year, the current year. Sarah? Ladies and gentlemen, this is fast facts. So if we just did one slide and stopped, we just want to communicate to you, as of the first of the month, we had 5,915 active listings, of which 4,282 are single family, 531 townhomes, condo 682, and modular homes 309. That is not much for our inventory. Our solds were at 7530, absorption rate 124, coming soon 420. Ladies and gentlemen, our coming soon peaked north of 750. We're down about 300 doors. There was a time when coming soon represented about 10% of our market, of our total inventory. We're at 5,915 active listings now. If coming soon stayed at 10%, we'd have 590, almost 600 coming soons. Our coming soon inventory is down by 180 doors. And my point to you is there is people are starting to pause a little bit for the Christmas holiday. I anticipate, we're gonna watch hard, coming soon, maybe middle of the month, that I wanna get my house coming soon notice prior to Christmas, and that I'll be ready to go essentially the first week in January. Quiz question for the group today. What is the single biggest search day for homes of the year? Sarah, put that in your chat box, and whoever gives you the right answer, we'll do something nice with them. But that day is coming up, so I anticipate coming soon going up in the next 2 weeks. Interest rates still holding low 2.3s, and our average sale price took a slight dip down to $419, $494, off about $9,000 from what it was this time a year ago, or a month ago. Fast facts, just something good to know. January 2nd is incorrect. Next slide.
Keep them coming, guys.
Last slide here is Phoenix. We have just 15 days of inventory in Phoenix for rentals. And that is up 12%, and an average there is $1.21 a square foot. So 1,000 square foot rental in Phoenix is $1,200, and more square foot it goes up from there. Paula, it's less than December 27th. Next slide. Okay, ladies and gentlemen, moving forward, if we zip through these, and we're gonna go very quickly, anybody in the audience, Sarah's gonna get this slide deck to you, but I think from the next 18 slides are gonna be alphabetized city breakdowns. So if you're with a listing in Goodyear or Peoria, just slide to the one that means the most to you, and you'll get a great snapshot of what's happening. But Apache Junction, Sarah, is first one.
Yes, and if you would like a copy of this presentation, we are recording today, and if you would like a copy of these individual slides, please put your email in the chat window or contact your business development manager, and we'll have all of these available today right after the presentation. So with that being said, we're gonna fly through these, right, Scott?
We're just buzz right through this. I wanna get to some other information I think is very important. So Buckeye, Chandler, keep going, Gilbert, they're all here. They're all very similar. Our appreciation is running between 9 and 18%. I did include all of Maricopa County in this slide deck. Paradise Valley still up 25% from where it was a year ago. Keep going for me. Scottsdale, Surprise, Tempe, they're all in here. Here we go. Ladies and gentlemen in the audience. this graph means nothing. I wanted to give an illustration as to what's coming for you who are serious about numbers with your buyers and sellers. This is a sample of the new report writer from ARMLS. And what I want to point out to you is I labeled this number of listing occurrences. This is this technical one of this is homes that are temporarily off market in Maricopa County. And I asked for it to come up in this date range of November of 18 to today. And I wanted a line graph. And I just wanted to illustrate in this example, February, March, April of 2020, you can see COVID hitting. We had a boom of people putting their homes temporarily off market. And since then, going into November, we dipped to the lowest it's ever been currently, November of 2020. Now, what's the point I want to make to you? When you look at number of listings dash occurrences, you as a user can make that any word you want it to be. I use temporarily off market in Maricopa County, so everybody knew it was only Maricopa County. And I can put that in the top left, the center, the right, the bottom left, center, bottom, bottom right. I typed in Scott Kiburz, owner designated broker, KW Biltmore. You can put your picture in there. You could send it to one customer. Sarah, I could take this report and send it to you and say, Sarah, here are the number of temporary off-market homes in all of Maricopa County. And you're saying, well, hey, I want to sell my house in Scottsdale. These are the homes that are temporarily off-market in Scottsdale. And I could almost make like a little sticky note of knowledge just to you. We have a couple more examples I wanted to give you, ladies and gentlemen. Next slide, Sarah. This is the number of new listings. It's a different report, but I just wanted you to see that this is the line graph with soft curves, and I had it shaded so it was easier to see the dynamic movement there. Now this next slide, Sarah, is the same report, but what I wanted to illustrate is I took out the shading and I put new listings Maricopa in the center, and I put listing occurrences in the bottom right. Please know as a user, you'll be able to do all of this for your client. I still didn't put my picture in there. Next slide. Same report, only instead of a line graph, this is a bar graph. And this is how people interpret things. So this automatically defaulted back as far as the data went, which was 2014. This is when the data warehouse was picked up by ARMLS. And this is just a horizontal line graph. We could do a vertical line graph, and you can label this, put your own logos in there, make it your own. That's my point. Next slide, Sarah. We're going to move on to a couple more things before we wrap up for the day. Ladies and gentlemen, there's been some saber rattling between the CoStar CEO, last name is Florence, and he's really called out the CEO of Zillow. I'm not trying to add drama, but when one $3.5 billion company calls out a Zillow $24 billion company, it kind of makes news. So here is the quote from the Inman article from the CEO of CoStar to the CEO of Zillow. Next slide. What I wanted to point out to you here is this is on the cover page of CoStar. Again, they're primarily a commercial house information base, but this is what they post. Next. Ladies and gentlemen, John Burns has 3 quick slides for us that are just really interesting. America on the move. What they're saying in orange, red, is people are moving out of this area geographically and moving into the green. And Phoenix is certainly front and center of one of those cities. Next slide. This is what's happening in a regional standpoint from Phoenix, Salt Lake, and California. And what they're talking about in Phoenix is we have 79,000 new jobs in August of 2020. One of our 12 housing markets were rated very, very high. And we have high construction demand. And we have a new product here called Built for Rent. Built for Rent is a product that new home builders are starting to provide just to investors. We're going to build a house and make an investment property long term. Next slide.
Paula had a question. Did CoStar just buy the HomeSnap?
They're in acquisition for that. They're trying to do a hostile takeover of CoreLogic. CoreLogic, ladies and gentlemen, has about 60 to 70% of our residential real estate data that they serve with at the national level. We use Flex, it's a different company, but CoreLogic is the single biggest data holder of residential real estate in the nation. And CoStar, yeah, they're trying to snap up HomeSnap, but they're making a hostile bid at CoreLogic. And ladies and gentlemen, if you talk about change, you know, Stefan Swanepoel said in 2014 that we'll have more change in 2014 and 15, those 24 months, than we did the previous 20 years. Ladies and gentlemen, we're on track to have more change next year than we had in the last 30 years, especially if billion-dollar companies go at one another. And that leads us to our last couple slides, Sarah. Thank you. This is what's happened with Zillow. I was fortunate to be in the audience when Richard from Zillow, the current CEO, spoke, and he said, ladies and gentlemen, we're going to go back to a startup mentality to every aspect of our company, and their stock price has gone from 22, 23 to 108, and their market cap now is 24, almost 25 billion. Jump ahead, Redfin has gone from 1.8 up to a market cap of 4.9 next. EXP has gone from a market cap of 1.1 to 3.7, and next, I wanted you to see, ladies and gentlemen, Realogy Holdings, 1.1 billion, $1.4 billion market cap. Stock is at 12.2. Last slide is Remax is currently at 584 million market cap at $31 a share. What I wanted to point out to your people watching today is this. Right now, having a technology impact, a lead with technology in real estate, has allowed you to be a darling of Wall Street. And it doesn't mean that they're making money, doesn't mean they deserve that market cap, but they've become darlings of real estate and Wall Street. Sarah, thanks for letting me just go hard today. And
You did a great job.
Paula go above and beyond. Ladies and gentlemen, Christmas Day. Everybody gets their new phones, iPads, computers on Christmas, and they're usually home with their families on that day. And so they actually do more home search on Christmas Day than any other day of the year. It's always a pleasure.
Right.
To jump off. Please share this with your audience and know that we'll have a little bit different look of report writer in early January of 2021.
Absolutely, absolutely. So Scott needs to hop off, but if anybody has any questions, we can absolutely get them to him. If anybody would like a copy of the slides from today, or if you would like, or if you would like the recording today, if you hopped on a little late, you want to get all this information, Scott breaks everything on here down so well. So this recording is amazing. So please either put your email address in the chat window or reach out to your business development manager. All of this will be available shortly after from them. So happy December, everyone. Thank you for joining us today. As always, thank you to the Landmark Title Business Development Management team. Beth, Becky, Melinda, Mary, Zach, Patty, and Michael. Y'all are the dream team to work with and a wealth of knowledge. So thank you to them. And as always, please think of Landmark Title for all of your escrow, title, and real estate marketing needs. We have currently 6 offices across the Valley to serve you. So wherever you are in the Valley, there is a Landmark Title office near you. And we would love to help you. I think we're going to have a great December. This year has been incredible for real estate. So we are happy to serve you. And everybody have a Merry Christmas and a Happy Holidays. And we'll see you again in January.